Good morning. మనకి పూరా దిక్తా good morning. Okay. So yesterday we had stopped at the formula for share capital is to reserves, if you remember. Just before starting the recording, one question was asked that yesterday we discussed balance sheet, or if you remember, I had shown you at least the basic format of balance sheet, right? The question which was asked is the format of balance sheet, whether it remains same in all the countries or whether it is different for different countries. Okay. Logically, what do you think before I talk about different countries? In India, at least the format should be same, yes or no? Obviously, it has to be the same. Whether it is whether it is the balance sheet or profit and loss account. In India, if you are a listed company, listed either on Bombay Stock Exchange or a National Stock Exchange, you have to follow the format which is prescribed under Indian accounting standards. The short form which we use very commonly is IND AS. Okay. Like if you remember, I had told you also that we have laws, we have company law, we have banking regulation act, all that. We have different acts in India. For accounting, there is no act as such. Instead of an act, we have standards. Okay. So we never call accounting laws, we call them as accounting standards. Okay. So Indian accounting standards, that is IND AS, requires a specific format of balance sheet to be followed, specific format of P&L to be followed. That is what we are discussing in the class. But outside India also, they could have their own standards, right? So for example, if it's a US based company, there is something known as US GAAP. United States ka GAAP full form is generally accepted accounting principles. Okay. So USA will follow their own style of presenting the balance sheet and P&L. That is US GAAP. Okay. In European countries, majority of the European countries, they'll follow IFRS. What is IFRS now? International Financial Reporting Standards. In simple words, it is their accounting standards version. As simple as this. Okay. I also was trying to study the balance sheet format of Japanese companies. I had just downloaded Hitachi and one or two Chinese companies also, but could not understand anything. Unki language mein tha. Okay. So even I was surprised with that. Entire balance sheet, entire P&L written in Chinese or Japanese language, whatever. But what we do in India is never I have seen any listed companies' financials being published in Hindi or in any other local language. So you should be knowing about this. Our law does not allow this. Law says that if you want to present it in regional language, you may, but it will be mandatory to get it converted into English and upload one more copy in English. Okay, you don't have option to choose that you will use only regional format, a regional language. Okay. What about foreign countries? As I said, everyone will have their own format. So like I was telling you, why IND AS? Why Indian accounting standards? Can I compare two companies' balance sheets? Can I compare the financial performance of two companies and decide which company is good? I can do that. Now can I directly compare Indian company and American company directly and compare this is better than that? No. Why? Their format is different, their accounting principles might be different, their accounting standards might be different. And that is why it was suggested that worldwide also we have similar standards or same standards for that matter. And this IFRS, International Financial Reporting Standards, which are used majoritarily by European countries, that is used by, I may say, almost 70% countries of the world. Majority use IFRS. Okay, so your question is solved. So if I give you one more example, let us say I'm talking about Infosys. Infosys is a company which is listed on the Indian Stock Exchange. They also have some of their securities which are listed on American Stock Exchange. Okay. Now you can imagine what happens with Infosys. They'll have to prepare one balance sheet or two balance sheets. Two balance sheets. One as per Indian format, one as per American format. And India mein to do hai hi hai. Which two in India, which two balance sheets you'll have to prepare? Very good. One is standalone and one is consolidated. That will anyways happen. Okay. Yes. So I hope this first doubt is clear about the format of balance sheets. So moving on, if you remember, yesterday I was talking about this point. Share capital, equity share capital. And here if you can see, the word used is other equity. Okay. Now I'll tell you what is the problem. In money, so Indian style of presenting the balance sheet has also changed in the recent past. Earlier we had a format style which was known as Schedule 3. There is no meaning of Schedule 3. It's just one of the schedules which is given as per Companies Act. Okay, so let us understand this. In Companies Act, there was a standard format which we had to use to present the balance sheet, to present the financial statement, to present the P&L basically. Now what happened was, our Indian Companies Act also changed. If you know this, recently in 2013, Indian Companies Act itself underwent a big change. Then as I said, for globalization purpose or for standardization purpose, Indian company versus foreign companies, there was a big discussion that why we are using our Indian format, why aren't we trying to match it with the IFRS format. Okay, so before 2013-14, all the companies were following the Indian format of Schedule 3. This is not Schedule 3 format, by the way, which I am showing on the screen. This is not Schedule 3 format. But if you, this is latest, 2019, you can see it. Okay. Huh? This is like IFRS. This is not IFRS. So if I were to tell you, our Schedule 3 format, the old format, if I say is here on the scale, Schedule 3 format. Okay, and here we have IFRS. Why have I drawn it on a scale? Because there will be a lot of differences. इंडियन अकाउंटिंग स्टैंडर्ड अगर कुछ बोलते हैं, शेड्यूल 3 कुछ बोलता है, तो कई बार एग्जैक्टली ऑपोजिट ट्रीटमेंट वाज रिक्वायर्ड बाय आईएफआरएस. ओके, सो देयर वाज, I mean, it was becoming very difficult to compare these two. So what big step we took was that we said we can't move directly from Schedule 3 to IFRS. It's impossible. So what we would try to do is go as close as possible to IFRS, wherein there will be at least 80% compatibility, may not be 100% compatibility. Okay, so the new format rather than Schedule 3, which was brought into picture for listed companies especially, is nothing but our Ind AS format, which I'm showing you on the screen. This is Ind AS format. Because he's asking why is it impossible to go from Schedule 3 to IFRS. The accounting differences are so huge that entire balance sheet, entire P&L, the valuation system itself is different. How I value furniture and how furniture is to be valued as per IFRS is also different. So you can imagine so many changes would have been required. Okay. Several parameters were involved. Okay, so that is why it was decided that we'll try to go as close as possible to IFRS, but we can't directly jump to IFRS. What we have done is we have followed the Ind AS. Is it okay till here? But yesterday when we were using this website moneycontrol.com, if you remember, we were checking out Larsen and Toubro, no? Right. So if you remember, we were talking about which part? Financials, correct? In financials, where this was balance sheet that we were discussing yesterday. And here if you see, the wordings which are used could be a little bit different. Why? So some of you might feel in the class that why are we discussing this Schedule 3 Ind AS? That's not relevant for fundamental analysis. But it is relevant for fundamental analysis. Why? Because whenever you check websites like Money Control, they will be using still the names which were there as per Schedule 3. They have not yet changed the names. Means what I will tell you in simple words. Like if you remember yesterday we discussed this term reserves and surplus, everyone. But if you check out this balance sheet format of L&T, the latest format, can you see reserves and surplus? No reserves and surplus. So do you think gayab ho gaya? Went away? Vanished? No. Now if you check out the figure 52,116.97, which figure is this? 52,000, maybe some small change. Now this figure 52,000 whatever, this is what? This is nothing but other equity. So what is this other equity? It's nothing but a different name, a different nomenclature for reserves and surplus. किसने नामकरण किया इसका? Who changed the name? The old name was as per Schedule 3. The new name is as per Ind AS. Okay. So you must know that why this other equity, or from where did this other equity come into picture? All these websites like Money Control are generally going to use this same format. See, if you see here, can you see this? In Money Control only you can see this. Results in new format. And originally you could see results in old format. So now if I go on results in old format, then it might show me that schedule 3 wala thing. Okay, see this is a little bit different one. Ek ke niche ek fat, all these points are coming up. But even if you go ahead with the new format, still they have not changed the names. Strange. So they have changes in the disclosures. That's what we say. They have changed the disclosures, the way in which it is presented, but they have not changed all the names which were required to be changed ideally. Okay, so what happens? There are many, even actually I thought of discussing this because even on YouTube I had got this query that when we see the annual report we see some different names, and when we check out websites like Money Control we see different names. Why is there a difference? Now it becomes very difficult to answer such queries on YouTube, to tell what is Schedule 3, to tell what is Ind AS, what is IFRS. But I hope now it is very clear why these names are different. Yes. So wherever there is a change in the name, I am going to discuss it here only. So if you want to write down, yesterday where we had written reserves and surplus, into bracket what can you write down? That is nothing but what? Other equity. So there only in your notebook you can write down into bracket other equity. As per which format? Ind AS. Reserves and surplus name is according to Schedule 3. Is this okay? Yes. So that is what I am explaining, terminology differences. So all the terminologies which appear in the balance sheet in Money Control versus this, all terminologies we are going to explain one by one right now. Okay, don't worry. Huh. Yes. And how is the question? Okay, so yesterday if you remember I said that reserves and surplus as a standalone figure also, I can say that it can be a parameter to decide, one of the parameters as usual, whether the company seems to be good or bad. So if you see here, continuously the reserves are increasing. The reserves and surplus, 5 years figures, they are continuously increasing. What is the interpretation of continuously increasing reserves and surplus? Why? Why is it good to invest? Because the profits are continuously on the rising side. If you check out some other company, I'll just quickly show you, 1 minute. Your favorite. So that you immediately understand the difference. Huh? Now where do I go quickly? Tell me. I should check the financials. Now if I go to financials, just check this out. This is also increasing, good. Continuously increasing, very good. But it is in minus. Okay, so don't say if it is increasing then invest. What is increasing is important. Na? The minus figure is increasing, the losses are increasing. You didn't look at any other parameter, only one parameter, reserves and surplus. Can I say directly keep away the balance sheet, directly keep away the share? Okay, those who are risk takers, I'll tell you now what could happen. There are some people even today who might feel that balance sheet gaya khadde mein. This is not important. We can go by macroeconomic scenarios. Possible. These are the risk takers. Now if you see here, the share price has crashed down to 47 rupees. 47 rupees per share. Now if I go back to the main page of Jet Airways where the main quote came up, here you can see what was its highs and lows. See here you can see a 52-week high. Means basically in last 1 year, what was the highest share price that it saw and what was the lowest share price it saw in the last 1 year? See, last 1 year lowest price is 27 and we are at 47 today. No, don't take it absolutely. And 357 was the highest and we are at 47 today. So has it corrected madly? Corrected has gone down. Has it gone down madly? Yes. Has it also recovered from its lows? Yes. Now, who can think about this? Who can think about investing in this company? Number one, you should be a big risk taker. Even if this 47 goes down to 0, you should be okay with that. Have you invested? Huh? At what price? At 47 only? You have placed a request for AM yesterday only? Oh. He has placed the order. Today he'll come to know whether he has got the shares or not. Why did I ask only him in the class? Because his facial expressions were only telling me. Why did ma'am tell today that reserves and supply should have been checked? Yesterday she should have talked. Okay, but then I can take it in a different way also. You might be a risk taker. See, what is the maximum loss that can happen? See, I'll tell you, those who are risk takers, you can think of buying the share. 10 shares. Especially those who are working. See, for you, 500 is like nothing. Those who are earning. 500 is not even 1 day expense for you. तो ऐसे समझ लो कि आप you went to some hotel, you spent money. Just think about it. Okay. Now, why could this share price ever on earth go up? Could there be any reason? Because see, if you know this Jet Airways flights are grounded now. Yes. So how can they generate revenue? There's only one chance. Some other company could buy Jet Airways. That is the only possible thing which could happen. Otherwise, but please don't be under the impression that this is definitely going to happen. This is what people thought for Kingfisher Airlines also. Exactly. So for Kingfisher Airlines, same old story had happened. It was going down. I'm not sure even if I can see the price here on Money Control today or not. But last price which I remember seeing was some 2 rupees something. Kingfisher Airlines. So let us just check if we can get the quote here or not. See, it's not traded. Kingfisher Airlines is not traded on the Bombay Stock. So, एक time ऐसे भी आता है that you can't even see the quote. That is gone forever. You can't recover this money. You can't say that thoda to dito na. You can't bargain. Okay, this is gone. So those who want to risk it out, maybe with a hope that someone might take over Jet Airways, you can risk it out. But if you ask me, a fundamental analyst, would it even look at this as a possibility? The answer is absolutely no. The reserves are continuously depleting. It's continuously into losses. So fundamentally, this share is a complete no. Can you short it? So, for those who know what is a short selling, because you'll get that in basics of stock market, by the way. Because short selling again is a big concept. In simple words, please don't be how is this allowed, how is this possible, but just take my words at face value. In stock market, it is allowed that you can sell first and buy later. I can sell something which I don't have and I can buy it later. So just for an example, when will you do a short sale? When will you sell first and buy later? If you feel that the price is going to go down. So just to give you a simple example, he is saying, let us say today Jet Airways is at 47 rupees. Correct, na? Today Jet Airways is at 47 and he feels that it will definitely go down. So what one person can do? Sell at 47 and when it goes down, let us say Jet goes down to 27, the lowest price which we had seen on the screen right now. Okay, how much profit you would have earned? 20 rupees per share multiplied by whatever. Correct? But in intraday, I mean for equity, you have to close it intraday. Means what? If you sell today, you have to buy today only. You can't say I will sell today and I will buy after 1 year when it reaches 27. This is not allowed in equity segment. It is very well allowed in futures and options segment. But then you will have to check, which I really doubt it would be there or not. I don't think Jet Airways will be there in futures and options segment. It will be banned. So anyways, this option is gone now. कोई तो बायर होना ही चाहिए डेफिनेटली. ऐसे कैसे बोल रहे हो आप देयर इज नो बायर? देयर हैज टू बी सम बायर. सो फॉर जेट दिस वन इज नो दिस. He's saying you are only the buyer. I'll tell you 1 minute. See, if कभी कभी हो सकता है ना. See, there could be some scenarios where there is no buyer, or there could be some scenarios where there is no seller. So this is a typical case. 4.35%. Yesterday it was up. There's a great chance that there were all buyers and no sellers. Again, this is the concept of upper circuit and lower circuit. Basics of stock. See, that is why I always suggest, I've told you in the beginning also, you must know these terms so that you get a fine understanding. Otherwise, you will understand what I'm talking about, balance sheet and P&L. That could be possible. Na? So, then no buyer for 10 or 15 days could be continuous lower circuits case. Quite possible. We'll first go ahead a little bit because
we were on this website, so I just earlier today I was looking at the internet company stock from whom I have an internet service Hathway. I was asking,
Hathway is also a listed company.
yes, so I was going to ask you.
Okay, I'll show Hathway's balance sheet. Hathway is,
Because they did not.
see, Hathway Cable and Datacom.
Yes.
22 rupees share price. Okay. I've never tracked this share, by the way. I'm looking at the balance sheet for the very first time.
Said that जो तुम services जिनसे
बिल्कुल. See now. Now if you check out their balance sheet, this is one standalone factor. Huh? See, in 5 years ago, their reserves and surplus were 1016. Okay, then little bit they got decreased. Steadily increasing, zoom. So it's a fantastic thing. So we'll have to again dig down deep as to why there is a big jump in reserves and surplus. For that, we'll have to download the annual report. Okay, so maybe tomorrow we can take this up as a case study. So we are going to do at least 4 or 5 companies fundamental analysis. So just maybe you can remember this Hathway. Okay, so coming back to our discussion, I hope you understood why on a standalone basis we can decide whether it's a positive factor or a negative factor. So to quickly sum up, reserves continuously rising, plus sign, is a good sign. We can buy the share. Okay, we again don't only look at money control, also check the breakup of 3947. Now where can you see this breakup? I'll tell you quickly. So we were talking about L&T. How much L&T's reserves and surplus are? 52,270 crores. Now if I were to check what is there in this 52,270 crores, how do I understand? Here you can see a reference note number 18. Okay, so please understand this. On the face of the balance sheet, on the first page of the balance sheet, you will see many figures, but the explanation of these figures, the breakup of these figures is given in some notes which are attached. Okay, so what am I going to search for now? Note number 18. So I'm just doing a page down, scrolling down, page down. Notes. Note number 17. See, yesterday, this is day 1, maybe. I'll show you 1 minute. See, here you can see this note number 18. What is this other equity? Other equity is nothing but reserves and surplus. Okay. See, you might not know small points like what is equity component of FCCBs, foreign convertible bond. There are going to be lot of things involved here. But I'm going to tell you which things you have to check out of all these disclosures. Okay. 2 to 3 things you compulsorily have to check inside reserves, whether that is forming a major chunk or not. At least 75 to 80% should be forming whichever figures I'm talking about. 2 to 3 major figures. See, number 1 is general reserve. General reserve you can see is 25,507. General reserve means what? Company had some surplus. They retained it with themselves. It's a general reserve. Is it a reserve for some specific purpose? No. I'll tell you a very simple example of what could be general reserve for people like you and me. Okay, I earn money. 100 rupees I earn. I have spent, let us say, 20 rupees. I have 80 rupees with me. Out of 80 rupees, I keep 30 rupees for my child's education. Out of balance 80 rupees which I have with me, I keep 30 rupees for my child's education. Can I say this is a general reserve or this is a specific reserve? Specific reserve. And balance 50 will be a general reserve. If I have lots and lots of general reserve, it means that koi tension nahi hai. I have lots of money. I can decide what to do with that. Okay. Is this money which has been actually received at some point of time? Yes, reserve hai. Okay. So general reserve is reserves kept with the company. See, reserve is nothing but plain English meaning. We call this, na? I'm keeping some money aside. I'm keeping some money in reserve. Kal future mein kuch bhi laga to I can use that. Okay. So can I say it's nothing but surplus left with me? Yes. So general reserve. So quickly tell me why the word general? There is no specific purpose which I have allocated for which I am going to spend this money. So general reserve is point number 1. Point number 2 is retained earnings. I earn money. Okay, I earn profits. Some profits I can share with the shareholders. Some profit I can give away to the shareholders. How can I give money to the shareholders? It could be by way of dividend. Okay, you understand what is dividend? Yes, some money which is given to the shareholders, that is dividend. So assume I earn 100 rupees as profit and I decide out of 100 rupees, 20 rupees I'll distribute as dividend. What is balance 80? Balance 80 is my retained earning. Again, plain English meaning. Earning which I have retained with myself. I have not parted. I have not distributed it with my shareholders. So is this my actual profit again? Yes. So these two figures are very, very, very important when you are checking the reserves and surplus number. So these two, I hope they are very clear. Now, one more reserve can be very important, which is your securities premium account, which is 8,471. I'll quickly tell you what is securities premium. These two meanings are clear. General reserve and retained earning. No problem in हाँ ऑलमोस्ट सेम ही हो गए दोनों. एज सच कुछ फर्क नहीं है दोनों में. रिटेन्ड अर्निंग could be earning out of my profit. General reserve is a reserve which I have kept for whatever purpose I want to. So almost same terminologies. There are minute differences, but again, we'll not dig down deep. Finally, from fundamental analysis perspective, what does this tell me? It is profit which the company has earned. They have kept it with themselves and they are not liable to spend it for any specific purpose. Okay? Yes.
Before we go to that securities premium, you said that we are giving dividends to shareholders from this profit. So how is dividend given? Do they increase the share price or how is the dividend?
No. Again, how is dividend distributed is again very basic knowledge. Dividend is declared on the face value of the share. Okay. Again, then what is face value of the share?
Yeah,
The actual value, the face value, like 10 rupees or 2 rupees or whatever. On that face value, dividend is declared. So assume company says 100% dividend we are declaring. Means face value is 10 rupees. And company says we are declaring 100% dividend. Means what? 10 rupees. And this 10 rupees will actually be credited to your bank account. End of the story. Okay. Chalo, so moving back. If I'm talking about what? The third one, which is securities premium. Now for this, face value knowledge can be important.
Your
Britannia example or the example which I was talking about right now. Let us say, or one more example I'll give, which I have discussed in my basics of stock market again. DMart. DMart, everyone has any idea? Yes. So DMart share price was 10 rupees face value. Okay. But Mr. Damani, who is the promoter of DMart, he said, people, do you want to invest in my company shares? Yes. So DMart came up with an IPO. And if you remember, yesterday we had discussed this concept. What is IPO? Initial public offer. But what Mr. Damani said is that you want to invest in my company? Well, very good, no problem. You will have to shell out not 10 rupees per share, but you will have to shell out 299 precisely, but let us round it off to 300 rupees per share. Okay. So has he charged some premium over and above the face value? Yes. And how much premium has he charged? 290 rupees per share, and he had issued some double digit crores of shares. So now you can imagine what sort of premium he might have charged in totality. Okay. This premium, is it a fake thing or is it actually really received excess money? Really they have received this money, this excess money that they have received. And this 290 rupees goes in my securities premium account. Securities premium account. The premium that you have collected over and above the face value is known as securities premium or share premium, and that entire amount goes here. Now you can imagine this. L&T securities premium is how much? 8,472 crores. That is the amount of premium that they have charged over and above the face value. Okay. Are these all realized profits? Yes. Why am I saying this realized profits? There could be some other accounts in the reserves and surplus, some other components in reserves and surplus, which might not be even actually received. It's just an accounting entry which is passed by the accounting standards. I'll give you only one example for this. Okay. You'll see your foreign currency translation reserve. Foreign currency translation. A simple example of this could be, I bought some goods from an American dealer. Okay. When I bought it, let us say I bought it in January 2019, let us say. Okay, I bought these goods. When I bought these goods, he billed me for $1,000. Okay. In my books of accounts, purchases, can I write down purchases $1,000 or I'll have to write down in Indian rupees? I'll have to write down in Indian rupees. Obviously, I have to convert that into Indian rupees. Now that Firangi, that American dealer, he has told me that it's okay if you don't pay me immediately. This is just an example. The American company says that you can pay me even up to 4 months from today. 120 days. Take your time. Pay me within 120 days. Okay. Now, January, February, March and April. We have time till what date? Everyone? April 19. Now what is the important date which comes in between? From Jan 19 to April 19. Is there some big event which comes in between? That is 31st March. The year end date. 31st March 2019. Now what our Indian accounting standards, Ind AS, tell us is what I'll just quickly tell you in short to understand why these reserves should not be considered while doing fundamental analysis. Okay. Assume at that point of time the share price was, the rupee to dollar rate was, let us say, 69 rupees. When we bought, that was 69 rupees. Now our standards tell that you have to recompute the profit or loss on this transaction by recalculating it with the rate on 31st of March. So I'll give you a simple example. Assume that on 31st of March, the rate has gone to 70 rupees. Rate has gone to 70 rupees. Is it good sign for the buyer or a bad sign for the buyer? Good sign for the buyer or bad sign for the buyer? Bad sign for the buyer. Why? Whenever the dollar price is increasing, it means that earlier I was required to give him, it's simple mathematics, earlier I was required to give him only 69,000. 69 into 1000. Now with the new rate, I'll be required to give him 70,000. Now 1000 is my straight loss. Possibility number 1. Possibility number 2, if it goes down to 68. This could also be a possibility. Now it will be a profit of 1000 rupees. Quickly tell me, is this actual profit or it is just calculated on balance sheet date? क्यों बता रही हूँ? Are we paying him on 31st of March? No. We are not paying on 31st of March. We will be paying in April. So this is an actual loss or this is just a notional loss. Notional loss means मे बी अगर 31st मार्च को पे करते थे तो क्या होता था? दैट इज द मीनिंग ऑफ नोशनल. ओके, अगर 31st मार्च को पे करते थे तो द लॉस वुड हैव बीन 1000. दैट इज द concept of a notional loss. Okay, had it been 70, then it would have been a notional loss. But if it is 68, then it's a notional profit. Is this actually earned profit or just a book entry? It's just a book entry. And this reserves, translation reserve. Why? What are we translating from dollars to rupees? That's a translation. That translation, it's a very small amount, but still it is 5 crore rupees. In our example, it was 1000 rupees. So you, and some students ask me, ma'am, only from 69 to 68. Now, what is the big deal? It's only 1 rupee. Okay, it's not only, okay, it is 1 rupee, but I hope you are able to visualize the multiplier factor. For L&T, it is 5 crore rupees. It could be a big, obviously, seeing other figures, it is very less. The reason might be that they are not having loads of suppliers or customers outside India. That is also possible. L&T is doing majority of its projects in India only. That could also be possible. But for a company like Tata Consultancy Services, for a company like TCS, for a company like Infosys, all the software companies, can I say this component can be a very big component? It could be a very big component. Why? Because majority of their sale is to outside, it's outside India, na? So now what mistake some person might do? Assume he's analyzing. So I'll just show you quickly Infosys ka data. It's going to be very nice, but still I'm telling you what could be the possibility. Check this out. 2178 was their capital, and how much is their reserves and surplus? 60,533 crores. Now wait, I'll discuss this also. 60,533. Okay, agreed. But then what could be the possibility? Okay, what could be the possibility is that 60,533 ke andar, what could be the split? A major part of 60,533 could be revaluation surplus also. Translation surplus also. Is that really important for people like you and me? No, because that is just a book entry. We have to ignore that. So out of 60,533, don't check how much is revaluation. What do we have to check? 3 things. Which 3 things? Number 1 is your general reserve, number 2 is your retained earnings, and number 3 is your securities premium. These 3 things we'll have to check, whether they are on a rising trend or not. Okay, but going back to Infosys, I'm sure everyone had immediately done some analysis, looking at reserves and surplus figures. Sabki aankhein udhar thi. 5 years, what is happening? And can you see the performance in last 3 years? 1, 2, and 3. 3 years continuously decreasing. This is what you're doing fundamental analysis right now. Good, you're feeling nice. Thoda aa raha hai. Okay. So have you understood this? How we can just look at the balance sheet and at least decide whether I should do more research or just keep this aside. This could be possible. Okay. So I hope till now you have very well understood what is reserves. Yesterday had we written this 5 years analysis, or how can we just analyze reserves? Only reserves, or have we just written the meaning of what is reserves?
Just the title.
Just no. Second point, yesterday we had discussed reserves and surplus, na?
We have written one line actually.
What is the line?
Profits generated from the business which are retained with the company is actually reserves.
Okay, so we have just written the meaning. So ratio about share capital is to reserve is what we are going to do right now. But I guess you should have written this one more line in reserves and surplus. Which line? The analysis part, na? What analysis part? I told you that only by looking at reserves and surplus, we can at least give 1 thumbs up or 1 thumbs down. And how can we decide? Analyze the 5 years trend for reserves and surplus. We'll write this down. Okay, in reserves and surplus point you have to write down. Okay, analyze the 5 years trend for reserves and surplus. Analyze 5 years trend for reserves and surplus. If it is continuously increasing, dash, what will you write? Is it a good sign or bad sign? It's a good sign. Which example did we take for continuously increasing 5-year reserves? LNT. So if you also were to write down examples, for this example was LNT. Second example for continuously decreasing trend. Increasing part in minus, na? So continuously increasing losses, dash. Example that we took was of Jet Airways. And the last one? Infosys. Third example that we took. Out of 5 years, the latest 3 years trend is decreasing. Latest 3 years trend is decreasing. Infosys. Recession hai thoda. You're also from IT? IT sector. Okay. Inside reserves and surplus only, one more point that we discussed just now, that how do we check the split of reserves and surplus? Split, for that I told you in the balance sheet only notes will be given. You'll have to understand which note number, then go to that note number. And write down 3 most important factors inside reserves and surplus. 3 most important parameters or 3 most important factors inside reserves and surplus. Again, reserves and surplus के अंदर ही लिखना है आपको. 3 most important parameters in reserves and surplus is what? Are what? 3 most important are general reserves, retained earnings, and securities premium. And what did I say? They have to form a major part of reserves and surplus. Na? So they should be amounting at least, how much did I say? At least 75 to 80% of your reserves and surplus figure. Then it makes sense. Okay. So if we can check quickly, ideally 80% तो होना चाहिए, तो और भी अच्छी बात है. Minimum I'm talking about. So if I just check here. So tell me which figures we have. 8471. I'll not even take the decimal points. 8471 plus 25,507 plus 17,527 is equal to, oh, this is way too higher, divided by what? Total reserves and surplus, na? Divided by total reserves and surplus is 52,270. This is 98.53%. So the major reserves, are they just book entries or are they actual reserves? They are actual reserves. They have this with them. Okay. So minimum, how much these 3 parameters should minimum count for? At least 80%. Then only it makes sense to analyze reserves and surplus. Okay. By the way, there is no, whenever I'm talking about any ratio or at least minimum this, minimum that, there is no law for this. Every analyst might say, so some person might say 80% is nonsense criteria. It should be at least 95%. Some person might say itni ki zarurat hi nahi, 60% is also good enough. Because there is no standardization here. Everyone will analyze in his or her own way. That's how I analyze it. At least 80% should be there. Is this okay? Yes. Can we move on now? Yes. And finally coming to the ratio of equity is to reserves and surplus. So that is just the heading that we had given yesterday. Equity is to reserves and surplus. Now can anyone tell me what was the meaning of this? 2000, now for even Infosys you can see here, 2 years they have not issued any capital. No fresh shares have been issued. But here, oh, here it is going down, if you can see. From 1148, they have gone down to 1092. How can capital decrease? So like we can sell shares, like when issue shares, this is known as buyback. Opposite terms, issue shares, buyback shares. Okay, whenever I'm buybacking shares, matlab kya? Companies buy back their own shares and cancel it out. So assume that they had issued 100 shares. Now what they do? Buy back 10, cancel it. So how much is the new capital now? 90. So can even capital go down? Yes. Now why companies buy back? What is the procedure? What would be the benefits? Whole lot of discussion. Okay. So right now just understand this concept. There is a buyback. I'll also tell you one more important point. I have made one video on buyback of shares. It is very much there on YouTube. There is a list called playlists. I mean, on YouTube, I'm sure you might have seen playlist aata hai. And in playlist, I have a separate playlist known as Weekend Ka Gyan. Okay. So you will also see my journey on YouTube, my original videos, which I used to shoot. The knowledge level is more or less same only. It's just about how it is presented 2 years ago and today. Such a big difference. I still remember initially I used to shoot it like this. I used to take my mobile and then start the front camera and hold it in my hand and shoot like this. And then my friends used to tell me that, Rachna, kaise shooting kar rahi hai tu? There is one big tube light right just above your head. It's feeling that you have an aura. And there's absolute dim light on your face. You'll see my original videos very much there on YouTube. Then what I used to do is before shooting, then I used to climb up on the stool, take out that bulb, and there's one more holder right on the opposite wall, put the bulb there, and then start shooting. I've tried all sorts of things, but see how presentation is important, and how you have the knowledge is same, how it was portrayed. That knowledge also had the same quality, I believe, but it never reached out to so many people. Just because good tagging was done and good digital marketing was done, I reached so many people. And same copy paste example I can give is you just search this Sonu Nigam as a beggar. Have you seen that on YouTube? Sonu Nigam tried to do this thing, fake beard and all that with a makeup of a typical bhikari. He took one harmonium, he sat on the footpath, and same quality of singing, amazing the way he played harmonium. And he said some people were giving 2 rupees, some people were giving 10 rupees, and then slowly and suddenly a big crowd started to gather. And when he heard someone saying that iska awaaz to Sonu Nigam jaisa hai, that was the time he picked up the harmonium and he went away. Okay, but in the interview after that entire experiment, he said, I was there for almost 3 hours and I collected some 200 something rupees. 3 hours I was singing, he said. And for same 3 hours in a concert, I would charge 10 lakh rupees, 15 lakh rupees, whatever. And he said, every single person who is a star feels that it's only because of me that I am what I am today. It's only because of my singing, it's only because of my teaching that I am so much popular. But it's not so. He said, singing मैं तब भी कर रहा था, मैं singing आज भी कर रहा हूँ. But it was presentation, the digital media which publicized for me, the microphones which made so many people listen to me. So all these things are there. So that buyback video, which I feel has good amount of knowledge, which I had shot almost 1.5 years or 2 years ago, it's there in my playlist on my channel, and the playlist name is Weekend Ka Gyan. Okay, you can actually take this video as a homework. You'll get good amount of knowledge on what is buyback, and then you will understand how this 1148 came down to 1092. Okay, so the concept is what? Buyback of shares, right? Instead of under the banner of Weekend Ka Gyan, I'm sure everyone knows by now, every Saturday only I'll post a video. So it is weekend only. But again, the name matters. The thumbnail matters. So earlier I used to say Weekend Ka Gyan. What was the thumbnail? Some auto-generated thumbnail, which YouTube only picks up from the video. But now my editor will take a proper thumbnail. Then he searches on web. So I'm also telling you some digital marketing tricks other than fundamental analysis also. I'd suggested him some different title for basics of stock market. And he said, Madam, this will not work. I said, why it will not work? Basics of the other title which I had suggested him. He said, that is not searched on YouTube so many number of times. So he gave me an analytics of which term is searched for by how many percentage of people watching YouTube. I didn't know about this. So he told me that this phrase or this keyword should be there in your title. Then only when people give a search on YouTube or search on Google, they'll be redirected to your website or to your SEO, search engine optimization. I know a little bit now. Search engine optimization. That's what he told me. See, so many things are important. Anyways, so I hope you understood this. Yes, buyback thing. And now we are coming to 2178. So let's take only current year's position as of now. What does it mean? How much core capital do they have to run the business? 2178 crores as on today, as on the balance sheet date. But how much profits have they earned over the period of years? 60,533. What does it mean? With an investment, I'll round off the figures now. With an investment, with an original investment of 2,000 rupees, they have been in a position to earn 60,000 rupees. What a return on investment. This is not how exactly return on investment is calculated. As I said, there is no name for this ratio. This is my ratio. Okay. So you have to check out how much money you have introduced in the business versus how much returns your business has generated for you. And how much returns your business has generated for you is 60,000, out of which major chunk I'm presuming is general reserve. Quickly tell me which three names. General reserve, retained earnings and securities premium. I'm presuming that these three will be forming a major chunk. So always check out this ratio. 2,000 share capital is to reserves. If this is a good ratio, so quickly tell me which should be more, which should be less. Retained earnings should be more and share capital should be less. If this is the scenario, it's one more thumbs up. Is this okay? But now I will tell you, it becomes industry specific as well. For IT companies, generally this ratio is very good. Why? Because the initial investment that they require in the nature of capital is not very high. Okay, but a capital intensive industry where lot of initial capital is required, their ratio might be not so good. Okay, so 2,000 is to 60,000 basic ratio analysis, it is nothing but a ratio of 1 is to 30. Basic mathematics. Ratio is 1 is to 30. Who can interpret 1 is to 30 for me? With 1 rupee of initial capital, the business was able to generate 30 rupees. And the moment this 30 goes on increasing, good or bad? Good. Absolutely. So now what we will do is, instead of Infosys, I'll take Hathway. Whatever searches which we have done today, I know these are not comparable at all. I'm not comparing them. I'm just giving you what could be the ratio. Still not bad. 354 is to 3,000. So almost it is like 1 is to 10. Na? So almost 1 is to 10. But for Infosys it was 1 is to 30. Okay. Have you heard about BHEL? Not अपना भेल वो बोलने भेल क्या है? Bharat Heavy Electricals Limited, BHEL. Now that is a capital intensive company. So let us check their financials as well. Still it is good. Very good. 6 is to 30 is like 1 is to 5. Not even 1 is to 5. It's 1 is to 50. It's 1 is to 50. With 1 rupee of capital invested, they have got 30 rupees. So 50 rupees, sorry, of reserves. Okay, so this is also a very good ratio. Any other company? Just 2 or 3 more companies. Just try. We'll take some small companies. Huh? Polycab. Still not bad. So 141 of capital and 2700 of reserves. Still a good position. Huh? Minda. Minda Corporation. Maruti का क्या? Yes, we'll take Maruti as the last one.
No, they are saying शायद यही मारुति का
How can it be? ज़्यादा रहेगा यू से कंस्ट्रक्शन है ना दिलीप बिल्डकॉन. This is also good. 45 is to 823. Some construction company will try. Dilip Bilcon will try. नहीं अच्छा लगा उसको. Still is good. Okay, last one. Huh? All these, those who are going to watch on pen drives is going to be like forward, 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 forward. अरे यार. No, it's still good. 603, 11,000 something. Maybe I can give this as a homework if you can search some companies wherein capital is more and reserves is less. Please understand this will be in case of more profit making companies or loss making companies. It is going to be, I mean, the adverse ratio is going to come up for loss making companies or which are in the downward trend. If we are talking about capital is more and reserves is less, isn't it a horrible sign? They have invested more money in the business and they have not been able to recover that much. Or maybe originally they had earned a lot of money, but because of losses, the reserves are going down and down. Okay, so this ratio is going to be bad for only those companies which are not doing good financially. Okay, so I hope we can just write it down as a final note in our books. You have just given the title of equity is to reserves, isn't it? Yes. Share is to reserves. Okay. Lower capital and higher reserves. Lower capital and higher reserves. Is it a good sign or bad sign? It's a good sign. Okay, yes. So I hope you have finally understood equity capital, reserves and surplus. Reserves and surplus is also known as other equity. And inside other equity, under reserves and surplus, what is to be checked? Which 3 figures are to be checked? That also we have discussed. So can we move on now? Yes. So let us check the balance sheet one more time. We have equity share capital, we have preference share capital, it's again a type of capital. Okay, then we have total share capital, reserves and surplus. That is where we are right now. Total shareholders funds. Hmm. There is no standard ratio for this. There is no direct indicator as such. You can compare with peers. You understand what do we mean by compare with peers? Compare with the competitors. When we compare with the competitors, like Infosys was, so you are in a, like I guess you are also in IT sector, na? So if you were to check whether I should invest in TCS or Infosys or Wipro, just let's take these three companies, then at least check इनका share capital कितना है and reserves कितना है. Check for three, the respective reserves and respective capital. So higher the better. Higher the reserves ratio is to equity. That will be better. There is no standard like if it is 10:1, then it is good. If it is below 10:1, bad. There is no standard ratio like this. Okay. Because as I said, this ratio will not appear in any book only. So there is no question of being standardized. I can use my own standards. And as I mentioned, in some set of industries, it's always going to be good. Like IT, it's always going to be good. Because it's going to have, it's generally less capital intensive. If more capital intensive, it's going to be the other way around. Okay. So I hope shareholders funds, this first part is clear. Even if we go back to the balance sheet of L&T, and even 302 कुछ तो था ना वो main page number.
So now for more capital intensive companies, is this a deterring factor or we should take into account?
For capital intensive industries, we should just keep into mind that this is going to be not so glorified ratio. Little bit timid ratio it is going to be. At least try to compare it with peers. That's what I'm saying. Okay. So coming back to our discussion. The first part, which is your equity and liabilities. The very first part was what? Equity. Inside equity, we had equity share capital, we had other equity, and now we have total equity. So this first 1/3 part of the balance sheet is done now. 1/3 from the liability side. Okay. We do have two major other headings, which is non-current liabilities and current liabilities. Hearing this for the first time? Anyone knows what is the difference between a non-current liability and a current liability? No. Yes? पुराना लोन जल्दी देना है. कब जल्दी देना है? Any specified time period within which we have to pay? 1 year. That's the correct answer. What is a current liability? Any money. See, everyone knows what is a liability. And what is a liability? Money which I owe is a liability. A liability which I owe, a liability which I have to pay within a year is known as current liability. And a liability which I can pay after 1 year is a non-current liability. Very simple. One more time if you can repeat with me. Money which is payable within a year is known as current liability. Money which is payable beyond 1 year, after 1 year is a non-current liability. Okay. Now I'll give you we are going to note it down, don't worry. I'll give you a simple example first. As usual, first we'll try to understand, then last step is noting down. Let us say I've taken a bank loan. I'm talking about first individual example of people like you and me. Then you'll understand the concept very nicely. And everyone is familiar with the concept of EMI. What is EMI? Equated monthly installment, which I have to pay to the bank every month on a specific date. Okay. Assume that I have taken a 5 years loan. Okay. And assume that I have taken it on 1st of April for simplicity purpose. Okay. How do you split this 5 years loan? Assume, again, I know this is not a good working, but just for you to understand, I'm taking simple figures and some basic assumptions. Assume that it is a 5 lakh rupees repayable to the bank. Total. So let us say I had taken a loan, original loan amount was 4,50,000. And I have to pay back 5 lakh rupees. Why? Interest component bhi rahega na? Correct? I had taken a loan of 4.5 lakh. Payable is 5 lakhs. And just for simplicity purpose, let us assume that we have to pay 1 lakh, 1 lakh, 1 lakh, 1 lakh and 1 lakh for 5 years. Okay. Who can tell me if I've taken a loan on 1st of April 2019, if I'm preparing my balance sheet on 31st of March 2019, how will I split this 5 lakhs? Will I split up 5 lakhs or I will not split up 5 lakhs? 5 lakh is money payable or money receivable for me?
Payable.
Money payable. So is it my asset or is it my liability? It's a liability. Okay. If it's a liability, my question to you is that will I show this 5 lakh rupees under one single head, one shot or what? No. I'll have to split it into two. How? Very good. First I will write down non-current liability and then I'll write down current liability. How much will be non-current liability? See, I told you that 5 lakh I have to pay over a period of 5 years. 1, 1, 1, 1, 1. So, non-current liability will be how much?
4 lakhs.
Non-current liability is 4 lakhs and the current liability will be 1 lakh. Simple. And assume I pay it in the next whatever X number of days, whatever. What will happen in the next year's balance sheet on 31/3/2021? Because this will be 31/3/20 ka na? Why 31/3/20 ka? Because I had taken the loan on 31/3. Oh, sorry, 14/19 na? So 31/3/19 it should have been. 1st of April 19 ko. Arey yaar. Sorry. I hope this is okay with everyone. Yes. Who can tell me what will happen on 21? ये तो अब 20 to 21 में मैंने ये pay off किया होगा. Now how will it be? 3 lakhs and 1 lakhs. And it will go on as 2 lakhs and 1 lakhs, 1 lakhs and 1 lakhs, 0, 1, 0. Have you understood very clearly what is a non-current liability and current liability? Yes. So we'll write it down quickly now. First we'll write down non-current liability. Okay. So the major title, we are discussing which side of the balance sheet? We are discussing equity and liability. Wait. Where will you write this? I'll tell you. Go back and where you had written reserves and surplus. Before that you might have written about capital. Shareholders funds, correct. Shareholders funds, right? Shareholders funds is nothing but your equity and liability starts at that point of time. So just above shareholders funds. Just above shareholders funds. Which side of the balance sheet we are discussing? Equity and liability side of the balance sheet. Just above shareholders funds, write down, I'll again explain this also, don't worry. Wherever you have written shareholders funds in your notebook, just write above that equity and liabilities. Insert row. Equity and liabilities. So under equity and liabilities, we are talking about the next term, which is non-current liabilities now. So just check this on the screen for a moment. It's very easily understandable on money control. See which part of the balance sheet we are discussing? Equity and liabilities. Inside that, first you have written shareholders funds, correct? Then shareholders funds may equity capital, whatever. So shareholders funds may main point was, first we talked about share capital, then we have also talked about reserves and surplus. So we are done till here total shareholders funds. But finally total shareholders funds is a part and parcel of what? Equity and liabilities. Okay. Now what is the next main heading? So like we have shareholders funds as number 1. Let us say I call this as number 1. Then this will be A is share capital, B is reserves and surplus, and now we are on number 2. Wait, confusion is peeking out. I'll give you the most simplified version. इससे simple हो ही नहीं सकता है. Okay, understand. What is the first point? Equity and liabilities. Okay, let us say this is Roman 1. Okay, inside that we have A. What is A? Shareholders funds. Okay, inside shareholders funds, now we have equity share capital, or instead of writing equity share capital, I'll give it a shortcut as share capital. Okay, share capital. Then number 2 we have reserves and surplus. But this is also known as what? This is also known as other equity. Okay. Then we have total. Total किसका है? Shareholders funds का ही ना? So let us say this is 50, this is 60. So total shareholders funds is 110. Just as an example. Then after shareholders funds, what do we have? B is non-current liabilities, and C we have current liabilities. Let us say this is, I'm just taking random figures, huh? There's no logic. So what is my total liability? 200. This, which ratio part? But ratios never appear in the balance sheet. Please understand this. Whatever ratios we are discussing, this is to this. That is just an analysis. Ratios don't appear on the balance sheet. We have to calculate ratios. Okay. Now is it easy? Are you able to visualize also? Yes. When we discuss assets, then I'll tell you a complete picture also. इसका मतलब क्या होता है? Can we go on? Yes. Write down. So quickly tell me, are we done with this part 50 wala share capital? Yes. Are we done with reserves and surplus part? Yes. So basically अपना shareholders funds, this we are already done with right now. Analysis के साथ. Meaning plus analysis both is done. Now we are on what? Non-current liabilities. So write down non-current liabilities as a heading. Okay. So what will you write as a meaning? Tell me. What is non-current liability as a meaning? Money which is payable. Money which is payable after 1 year. Money which is payable after 1 year is known as non-current liability. Money which is payable after 1 year is known as a non-current liability. And immediately write down the next one, current liability. Current liability. Current liability meaning is what? Money which is payable within 1 year. Money which is payable within 1 year. Is a current liability. Is this okay? Yes. I have not talked about analysis part, na? Non-current liability ka analysis, current ka analysis, because I'll tell you one thing. Non-current liability standalone analysis 0. There is no standalone analysis for non-current liability. There is no standalone analysis for current liability also. Like we had a standalone analysis for reserves and surplus. We can't check a standalone analysis for this. Just as an example, which company is this by the way now? Okay, GMR. GMR infrastructure. You can see here non-current liabilities. And here you can see total non-current liabilities. If you see here completely, the non-current liabilities are increasing. Does it mean it is bad? Not really. Does it mean it is good? Not really. There is no analysis. Only non-current liabilities, there is no analysis. I'll have to compare it with something, then I get a good analysis. Okay. It's a big analysis for non-current liabilities. It'll take at least 45 minutes for this. For you to understand the ratio, which is known as debt to equity ratio. Okay, which we are going to do tomorrow. But today we are going to do an analysis of current ratio. The name of the ratio is current ratio, but wait, don't write first, because current ratio is a ratio between current liabilities and current assets. Okay, but first, before we do this ratio, we must know what is a current asset. And what is current asset? Okay, inventory is current asset. Okay, but it's an example, it's not a meaning. जो फटाफट पैसा मिलता है. Anything which can be converted into cash or bank balance. within 1 year. If we can convert this into liquid asset मतलब क्या hard cash, so it need not be hard cash, cash, or we call it as a cash equivalent. It's not cash, it's not currency notes, but it's like cash only. Can I say my wallet balance, ATM wallet, whatever, is it like a cash equivalent only for me? Yes. It's not a hard currency note, but can't I use it like money anytime, anywhere? Yes. My bank balance, my balance in saving account, is it hard cash? No, but I can just walk down to an ATM and get hard cash. Possibility number 2, I can just swipe a card at some shop and I can use it as good as cash. So what is the meaning of cash equivalent? Something that I can use as a direct replacement for hard cash. Okay, we can't say that this bench, I'll go to a shop, I'll buy something, and I say I don't have money. You can come to my classroom and take 2 benches. That is not possible. We are not in barter system age. Okay, so can I say furniture is a current asset? I mean, it's not a directly it can't be directly converted into cash. So it's not a cash equivalent. I hope you have understood the meaning of a cash equivalent, right? But then what is inventory? I'll explain few important meanings also inside current assets. We'll write this down. Don't worry, first understand the meanings. What is inventory? Inventory is nothing but my stock which I'm going to sell. Okay, so let us say I'm a furniture dealer. Trader basically. I buy furniture from a wholesaler and I sell it to retailers. I sell it to, let us say, customers. Okay, so you can see many furniture shops. Okay, like in Pune we have Nirmiti, and Nirmiti is on Law College Road, or many shops. You'll see on the road. In fact, this Bajirao Road where we are right now, it's full of furniture shops. Okay, so what do these guys do? They'll buy from a wholesaler and they'll sell it to people like you and me. Okay, for them, tables and chairs or any sort of furniture is inventory, which is a part of current asset. List of items that we are going to trade in, all the items that in which we are going to trade in is inventory. Okay, I'll tell you one more. I'll quickly tell you 5-6 examples. It should be fit into your mind. Assume I'm a laptop dealer. You can see many shops on Tirak Road. All in line. All shops are selling computers. So what do? They'll buy in bulk from a wholesaler and they are selling to people like you and me. For them, laptop is an inventory. Okay. A construction company, for them, flats is inventory. They're not buying it, but they're making it. They're constructing it. So anything which you construct, but which you are offering for sale, that's your core business. That's your inventory. Is this okay now? Yes. One last example. Assume that I'm a garment trader. I'll buy in bulk from China. If you know this, from China, there are many people who are earning their bread and butter by doing this thing. They buy shirts and pants from China on per kg basis. I bought 20 kgs of shirts today. ऐसे मिलता है चाइना में. Buy 20 kgs of shirt, then do nice, take it, import it into India, pack it nicely, okay, and then sell it on a per piece basis. They're earning decent enough money in that. Okay, so it sounds very weird that you bought 20 kgs of shirts. But that's what people do, right? For them, for such people, shirts is their inventory. Very clear. Can I say it's an item in which I deal, in which I trade, is my inventory. But what could be inventory for some person could be a fixed asset for another person. What is this fixed asset? An asset which I am purchasing for my own purpose, for my business purpose, and which I don't intend to sell. I'll repeat. An asset which I purchase for my business purpose, but I don't intend to sell, is a fixed asset for me. Please don't take a literal meaning that fixed means it has to be fixed. Immovable means not fixed. What is the meaning of fixed asset? I buy it. My intention is to use it for the business and not to resell. Quickly, let us understand my own examples. I have purchased this laptop. It's a Inventory for me or it's a fixed asset for me? It's a fixed asset for me. Okay, I purchased, let us say benches. It's a fixed asset for me. I have not purchased, but assume I have purchased this classroom. It will cost me some crores of rupees. Okay, assume I have purchased this classroom. Then it's a fixed asset for me. But the same classroom for the construction company was inventory. This same bench for the furniture dealer was inventory. This same laptop for the shopkeeper was inventory. So how do you define? Laptop तो वही है, bench भी वही है, building भी वही है. How do you decide whether it's a fixed asset or whether it's an inventory? Depends on the intention or the use. If the intention of the buyer is to use it for its own business, it's a fixed asset. If the intention is to buy and sell, trade in it, it's an inventory. Or I buy a raw material, I make something out of it and I sell it, it's still inventory. Have you understood inventory? Yes, very good. So we talked about inventory. Now we talk about the meaning of trade receivable. See, the name itself says money is receivable. Whom do I call as a trade receivable? Generally, such trade receivable is no one but a customer from whom money is receivable. If you remember yesterday's example, wherein I talked about cash purchase and credit purchase, or cash sale and credit sale. You remember that example that we discussed yesterday? Some 100 rupees, 150 rupees, that example. Okay, so assume that I sold goods worth rupees 150 in total. Same example like yesterday. I sold 150 rupees worth goods in total. 50 rupees I received immediately in cash. Okay, and 100 rupees I have sold goods on credit. What do we mean by selling goods on credit? Have I sold it to a customer immediately? Yes. Has that customer paid me money? No. So for me, money is receivable. Why money was receivable? Because I traded, I sold him some goods. So that party will be known as a trade receivable. So money is receivable because I have traded with him. So that's a trade receivable. Is this okay? So in simple words, can I say trade receivables are no one but suppliers or customers? Everyone? कौन होने वाला है ये receivable? Is he going to be my supplier or is he going to be my customer? My customer from whom money is receivable. That's a trade receivable. Simple till here? Yes. So three major things we have covered. What is an inventory we have covered? What is a trade receivable we have covered? And what is cash and cash equivalent we have covered. Now ideally with logic, you know what is the meaning of current asset. Last time quickly tell me what is the meaning of current asset. Oh, did I tell the meaning of current asset by the way? Yes, I did. Anything which can be converted into a cash or cash equivalent within a period of 1 year. The cash and cash equivalent is itself a cash and cash equivalent. So it has to be within the 1 year criteria. Hai nahi, matlab it is a current asset. Now let us understand. Trade receivable. Why have we taken it under current asset? Within 1 year, I expect that money will be received. Almost everyone in the class has some work experience. Have you ever heard about any businessman saying that, okay, I'm selling goods to you, pay me after 2-3 years, no problem? Does anyone say that? No one. Generally, 30 days credit is given. Many times 90 days credit is given. But very few people will give beyond 90 days credit. Okay, 90 days credit is what? 3 months. So can I say money is expected to be received within 1 year? So that is why it's a current asset. Okay? Oh, we are going to write down everything, don't worry. Okay. Then what about inventory? What about inventory? Why is it current asset? Ha. So ideally, whenever I have, like he's saying, if I have purchased raw material and if I have prepared some product, which is my inventory, do I at least expect that this will get sold off within 1 year? Ideally, yes. So like I have manufactured all these benches. I don't say that maybe आगे के 5-10 साल में बिक जाएंगे. I'll have to shut down my business if I'm able to sell it after 5 years or 10 years. Right? What is my expectation? That I should be selling it off within 1 year. And obviously, a logical businessman, if he feels that in 1 year, maximum 2 benches I'll be able to sell, then he's going to manufacture only 2 benches. Because his funds are getting locked inside that, na? Correct? So, why inventory is a current asset? Because the businessman expects that this inventory I will be able to sell and get it converted into a cash or a cash equivalent within 1 year. Is this okay? Who can tell me what is current what is current investment? And why is it there under current assets? And if anyone can give me an example on this, think. Okay, he's saying in stock market, if I'm buying shares with an intention to sell it immediately or within 2-3 days, that would be an example of current investment. Why not? But I'll tell you what happens. This is about intention now, which is very difficult to define. Okay, the simplest and hardcore example can be a fixed deposit FD, which has a maturity of, let us say, 6 months. Which has a maturity of 6 months. Is there any intention here? No intention as such. The paper says it's a 6 months FD, right? FD can be converted into cash or a cash equivalent. You can remove funds from FD and take it into your saving bank account. Correct? So if it's a 6 months maturity, I'm going to get money within at the end of 6 months. This is the best example of and easiest example of what? Current investment. Okay, but there could be some investments based on intention also. Like he said, I am buying shares with an intention to sell it within 2-3 months. Okay, so what will I do? I'll club up under current assets only. I'll give you one more example. Gold. I am buying gold with an intention to sell it within 1 year. I'll treat it under current investments. And current investments is a part of current assets only. Simple, I've given you 3 examples. Which 3 examples? FD, 6 months FD has to be current investment. There's no second thought on that also. And second and third example can be shares and gold. Ideally, if my intention is to sell it off within 1 year, I'll treat it under current investments. Is this okay? Now, who can tell me quickly what is a short-term loan and advance? Short-term is finally current only. Who can tell me what is a loan and advance? The word itself says, and why I will club it up under current assets. You can convert it into cash within 1 year. Any example which you can give for a loan and advance? Okay. See, if you have borrowed a loan, if you have taken a loan, is it your asset or is it a liability? You have taken a loan, it will be your liability. What? Okay, so if I am talking about in which title are we right now? Current assets. So if you have taken a loan, it will be your liability, not your asset. So maybe you have given a loan. Why will I give a loan? I'm not a bank. Simple. I'm a businessman. He's my employee. My employee needed a loan. Okay. But I will not call him as a debtor. Debtor is a trade receivable. Debtor is like trade receivable. Have I traded with him? Is he my customer? No, he's not my customer. Whenever he's a customer, that will be clubbed up as a trade receivable. But he's not my customer. He's my employee to whom I have given an advance. And I'm telling you, you have to pay me within 3 months. Huh? Then what will that be? That will be a short-term loan and advance. So quickly tell me, can this same title of loan and advance also reflect in liability side? Yes. How come? Because in that scenario, I would have borrowed a loan. In this scenario, I have given a loan. No. See, if you are saying credit पे goods दिए, credit पे goods दिए, मतलब सामने वाला party again कौन है? If I have given goods on credit, he is a customer. Then again he will be counted as a trade receivable. He is not my customer. He is my employee. Okay. In that case, I will say it's a short-term loan or advance. Have you understood this small difference, everyone? And other current asset is like sundry. I mean, if it does not fit into any of these criteria, It will go into other current assets. But in this case, in fact, the biggest chunk is other current assets. But if you want to check what comes in this other current asset, by the way, which companies is this? Was GMR, na? Yes, GMR. But now this is one small problem with money control. I'm not sure if direct notes are given or not. नहीं देते मेरे हिसाब से लेकिन. No, you'll have to download their annual report in this case. So at least you know when to download, when not to download. No? See, if I want a breakup of this 7182, you will not find a direct breakup of this, that what is included in the 7182. What will you have to do? Step number 1, download annual report. Is it available free of cost? Yes, just go to Google and say download GMR infra annual report. Download any annual report. Okay. Then you will see balance sheet, same figures you should see. And in the balance sheet, you will say note number. Then go to that note number and then you will understand what is the exact breakup of this. Okay. Yes. Current assets. Each and every term you have understood. We'll write about current assets and then we'll stop for the day. Yes. Quickly we'll write down. Should not take more than 5 minutes. Okay. Just be a little bit fast while writing down. Write down current assets. Wait. 1 minute. Because we have discussed it in a very systematic manner. Equity and liabilities. Inside equity and liabilities, we had 3 major points. Which 3 major points? Shareholders funds, non-current liabilities and current liabilities. Now we'll give the heading as what? Assets. Give the main heading as assets now. Roman 2, it's like Roman 2, correct. And inside assets, which 2 major points do we have? So like Roman 2, we have 2 major points. A is non-current assets. First, in our Indian style of writing down the balance sheet, we always have non-current assets first. And then we will have current assets. Okay. We'll write down the meaning first of both and then we'll talk about current assets individually. Chalo, who can tell me what would be a non-current asset? Payable. Asset hai. Receivable. Or how did we define it? He told for current asset, na? An asset which can be converted into a cash or cash equivalent. Non-current के लिए क्या लिखेंगे? After 1 year. Correct? So write down quickly. An asset which can be converted. An asset which can be converted into a cash or cash equivalent after 1 year. Number 2, write for current assets. Can you write the meaning on your own? Instead of after 1 year, what will you write down? Within 1 year. Okay. We'll quickly write down the components of current assets now. Now inside current assets, you can write down A, B, C, D, E. Okay. A is what? Current investments. A. So we are writing inside current assets now. A is current investments. What will you write in current investments? So wait. I don't think we should write it every time that it can be sold and it can be received in cash and cash equivalent within 1 year. We have already written the meaning. Shall we directly write down examples? Examples. 3 examples I had given. Which 3 examples? For current investment, FD, 6 months FD. Okay, so write down 6 months FD. And next, one more example that you can write down was what? Gold or shares. गोल्ड कॉमा शेयर्स, बट वेट, गोल्ड कॉमा शेयर्स के लिए आपको इनटू ब्रैकेट क्या लिखना पड़ेगा? Intention is to sell within 1 year. Because can gold also be a non-current investment? Yes. Check out your mom's investment. Your mom might have purchased gold X number of years ago. 10 years ago, 15 years ago, 20 years ago. And in Indian culture, selling gold is, we'll say, poor people. They have to sell their gold. क्या मुसीबत आ पड़ी उनके ऊपर. No one will look at gold from investment purpose or investment angle. Everyone looks at gold from an emotional angle in India. मराठीमध्ये we say in मराठी, बिचारांना सोनं विकायला लागलो. It's like we absolutely pity them that they had to sell gold. Okay, look at gold even from an investment perspective. I have invested in gold when I was in first year college, first year BCom, when I started doing CA. And I've invested gold at that time at 8,000 rupees per 10 grams. I had less money, I had barely invested any amount. But still, what do I believe? 8,000 ka purchase kiya hai. Today it is what? 35,000 easily? 30,000 plus, so for sure. It will keep on fluctuating, I know that. So has it gone up by 4 times, more than 4 times? And I have zero emotional attachment with that. Because never purchase any ornament if you want to make it as an investment. Purchase in solid form, matlab, you have that ring format mein hota hai. In Marathi we call that as vada. Okay, that's like a ring format. Or it could be even like a kada format. A bangle with zero, designing on that. And in Marathi we call that as goat. Goat. It's like kada only. Kada jo ladke pehante hai. And it's completely plain. No design at all. Why am I saying you should buy a plain? Because there will be no making charges inside that. Making charges is complete loss. Okay, so whenever you're purchasing for investment, don't see that it has no features, it's not looking nice. If it looks nice, you will get emotionally attached.
And you start liking that.
Then you will not be able to sell it once it goes up. So buy something, some form of gold which is not very pleasing to watch at. Okay, it should not be attractive. It should just be an emotion. Only the financial angle. Wow, 20,000 rupees. That should be the only attraction. Okay, right? So I hope you have written this down. Gold and shares into bracket. Intention is to sell within 1 year. Second one is inventory or inventories. What is the meaning of inventory?
List of items.
Okay, so these are nothing but items which are purchased with an intention to sell, or items in which a businessman deals. Okay, items in which a businessman deals. Items in which a businessman deals. That is, they are bought with an intention to what? They are bought with an intention to resell or sell. With an intention to sell. They are bought with an intention to sell. Is this also okay? Yes. Achha, what can you write as one? We'll write one example. What could be one example? A garment shopkeeper buys shirts with an intention to sell. Or it could also be a furniture dealer buys furniture with an intention to sell. For him, furniture is an inventory. Third example, I think I had taken for laptops. Anything, any one example you can write down. Done? Can you move on? Number C. What is number C? Tell me. Trade receivable. Trade receivable. In simple words, just a one line. What is a trade receivable? Customer from whom money is receivable. A customer from whom money is receivable. You need not write the other part which I'm telling right now. But is he a person to whom I have done a cash sale, or is he a person to whom with whom I have done a credit sale?
Whichever, both, whichever.
It has to be a credit sale, guys. See, if I have received cash right away, what is the meaning? One more time, what is the meaning? He is a person from whom money is receivable. It's not received or receivable. Are you getting the small difference? Have I dictated money is received or receivable? No, it is money is receivable. So let us take this example. He is a customer. He comes to my shop. I am selling furniture. I sell him furniture and I take cash from him. Did my trade receivable increase or did my cash and cash equivalent increase?
Cash.
My cash and cash equivalent increased and my sales increased. Where is the question of trade receivable? Case number 2. He came to my shop. He purchased furniture and he said, please give me 30 days to pay. Now, did my cash and cash equivalent increase? Did my cash and cash equivalent increase? No. What increased? The trade receivable amount increased. Okay, money which is receivable from a customer, that increased. So quickly tell me, trade receivable will come only in case of what? Only in case of credit sale. उधारी पे बेचा गया माल is credit sale. Okay? If you want to write this down, you may. I thought there would not be a confusion at this point, but you can write it down. Trade receivable is increased only when there is a trade receivable amount is increased only when there is a credit sale. Only when there is a credit sale.
Now we are on this point. I just want to ask, for some goods, we do like down payment and then rest of the payments. That falls under what?
No, if you are talking about buying something with, let us say these days, you will get credit for everything. Bajaj Finance just changed the game. Bajaj Finance, if I'm not mistaken, is the first NBFC, the first company which started giving loans for even mobile purchases. And they just changed the game. Okay. So for a shopkeeper, is he receiving money? Let us say you are the customer, you come to my shop to buy a mobile and you say, I'm taking mobile on loan. Okay. So for him, he does not make me the payment immediately. But who is making payment immediately? The bank is made, the NBFC, Bajaj Finance in our example, Bajaj Finance is making loan immediately, the payment immediately. You are liable to Bajaj Finance. I am not concerned with that. So for me, it's again increase in cash and cash equivalent. Immediately I'll get money from Bajaj Finance. Okay? Right? Next one, cash and cash equivalent. The second last term, cash and cash equivalent. So there is nothing to describe about what is cash. But what is a cash equivalent? So we'll just write an example for this rather than writing down meaning for this. What is the best example of cash equivalent? It could be your debit card, it could be your wallets, it could be your saving account balance. So debit card is not a good example because debit card is nothing but your saving bank account balance. Na? Card is just the way through which you can withdraw money. Credit card is again some means through which you can withdraw money. Okay, so you can write down two examples. One is a saving bank account. Saving bank account balance is an example. And one more example you can say is wallets. Balance in wallets is your cash equivalent. ATM wallets or whatever wallets. Yesterday I told you the difference between reserves and cash, na? What is the difference between reserves and cash? Even today also we have discussed that can reserve include something which is just a book entry? Hey everyone, today only I told you one example where, do you remember 3 points which we had to check in reserves and surplus? Which 3 points? One was general reserve, one was retained earnings, and one was securities premium. Okay. Ideally, in all these three circumstances, reserve should be equal to capital. It should be equal to cash, because this is actually received money. Okay, but still I will tell you, no. The retained earning part, which is profit for the year, this includes mainly profit for the year. Can I say if I earn 100 rupees profit is equal to I earn 100 rupees cash in this year? This is yesterday's discussion. If I say I am getting 100 rupees profit in this year, is it equal to 100 rupees cash in this year? No. Why? Yes, sir. 150 क्या याद है फिर? कल का पूरा एग्जाम्पल यही है ना? Good that I don't rub anything. 300 rupees was sale. Cost was 0. Surplus is 300. Taxes are 90. And how much is my final profit? This is my final profit. 210. But what was this breakup of 300? Here you can see this is the breakup of 300 is 50 rupees in cash and 250 rupees as credit sale. So do I have any cash balance? No. Why? Out of this 50, I had to pay 90 rupees taxes. This was the most horrible scenario. If you remember, earning profit cannot be always good. What could be a horrible scenario? You have profits, but you don't have cash. Okay. Do I have profit for this year? Yes. Now where is this profit taken? This profit is taken from the profit statement, P&L statement, to your retained earnings in reserves and surplus. So this amount is shifted to what? Shifted to retained earnings, to reserves and surplus. So tell me, how much is your reserves for this year? Reserves for this year will be 210. Correct, na? Retained earning will be 210. But how much is your cash balance? 0. Effect, you don't have cash even to pay your taxes. Cash can't be minus. So basically you'll have to borrow first, borrow a loan, take a loan, take loan of 40 rupees and then pay your taxes. This is the scenario. तो कल का एग्जाम्पल है ना अपना. Now is it better? Right? So who can tell me? Reserves is equal to cash. Correct or wrong? Wrong. In normal business scenarios, this will be absolutely wrong, because in that case you are presuming that 100% is cash transaction, which will never happen. And there are many non-cash transactions also, which we are going to learn in coming days. Something known as depreciation, which is a non-cash transaction, which will reduce my surplus, but effectively there is no cash outflow. I'm sure कि ये last sentence was complete bouncer, but it's okay. I have not discussed that only. But as of now, reserves is equal to cash. Wrong. Okay. So we have written about cash and cash equivalent. Examples also we have written. The last one is short-term loans and advances. We'll just complete this. Short-term loans and advances. Okay. Directly we'll write down an example. What was the example for short-term loan and advance? Loan given to an employee. Very important word is loan given. Then only it's an asset. If it would have been loan taken, it would have been a liability. Loan given to an employee. Okay? Right? So this is the entire breakup of your title of current assets. Okay. I was going to tell you the current ratio and all that also, but I guess we should do that tomorrow. Okay. Any quick doubt which I can solve in a minute or two? No? Share capital बढ़ना चाहिए या नहीं बढ़ना चाहिए? See, if you're, I guess this also question I answered yesterday or day before, wherein no businessman will increase share capital just without any reason. Same example I had given. See, my share capital for the past few years. See, now in this case, 4 out of 5 years it is same. 603, 603, exactly same. Now I'm feeling depressed. कुछ भी change नहीं यार. I should do something. Let's raise capital. Would this happen? Never. Because if I'm raising capital without any reason, so I say I want to raise capital. Are you ready to give me money? Are you ready to? So assume that these 200 people are ready to give me money. Are they mad to give me money without any reason? What will they say? What are your plans? Where do you plan to invest? How much returns will get? Expectation starts immediately. So no one is going to raise capital without any reason. So if there is an increase in share capital, always try to search why are they increasing capital. Okay. Whenever they are raising money, let us say through an FPO, further public offer, there is a document which is released. It's available for public. The name of that document is prospectus. And inside that prospectus, the reason why they want to raise funds is very clearly mentioned. And again, let us understand a plus sign or a minus sign. If in the prospectus it is mentioned that we are raising funds to expand our business abroad, good sign or bad sign? Good sign. At least an expansion phase might come. The business might scale up. Correct? So you have to understand the reason why capital is increasing. Rather than just saying, wow, capital is increasing. Or it can be for any reason also. Which cannot be such a bright reason. Simple example I'll tell you. There was one company which came up with an IPO. And they said that we are raising capital because we want to pay off the loans which we had taken from our holding company. Paying off loan which you have taken from your own holding company, for that you are taking funds from us. Did the share capital increase? Yes, share capital too will increase, na? But as an investor, I would never want to invest in that business. Just because you want to repay loan of your own holding company. Doesn't make any sense. So, increase in share capital. There is no standalone analysis. What could be an analysis part? Why have you increased capital? Oh, like ESOPs. Have you heard about this ESOP? Okay. In simple words, quick discussion. ESOP. Shop nahi re? ESOP. ESOP. Employee Stock Option Plans is the full form. Employee Stock Option Plan. What is it? In short, I'll quickly tell you. Whenever a company, like let us say L&T, Larsen and Toubro, and assume that you all are employees of Larsen and Toubro. I want to thank you all. You're doing a fantastic job in my company, and I'm assuming I'm the owner of L&T. Okay, so I'm saying that you all are doing a fantastic job with my company. You have stayed with my company for whatever number of years. You are giving your best. So आप मन ही मन में क्या बोल रहे हो? कुछ देने की बात करो. Don't say thank you. Okay, so what am I offering to you? I'm offering to you shares of our company. Okay, now if you check, L&T ka market price was roughly around 1400 rupees. Also, I'm giving you shares of my company. Logically, should I be giving you the shares at a discount? Then only it makes sense, na? I'll say you, wow, you have done a fantastic job. Everyone, I'm giving you 100 shares. I allot 100 shares and I'm saying, give money. Again, makes no sense. So can I say give money? Okay, but give it to me only at 1100 rupees per share. Then that makes sense. Okay, so I'm making employees also a part of, they are making a part of the core contribution of the company, core capital of the company. So are you also getting the feeling that you are also the owners now? Because they are now the shareholders, like owners. Okay, so ESOP is nothing but the point which you asked, that share capital can increase even if shares are issued for employees in the nature of ESOP. But this will be generally issued at a price which is discount to the market value. So if you want to just understand the meaning of ESOP in a one-liner, what is ESOP? Shares. So, but again, it's not directly shares are given. It's an employee stock option plan. The word is very important. What is the word? Option. You can't say thanks a lot, and I'm ready to give 100 rupees shares to. I'm going to give 100 shares to everyone, and current market price is 1400. You can take it at 1100. Employee may say nahi chahiye. Okay, especially the finance department guys. They know what is going on. अंदर की बात पता होती है उनको. They'll say everyone feels that our company is amazing. We know that the company is doing horribly. 1100 नहीं, इसके 110 रुपए की भी लायकी नहीं है. So finance department guys might say that we don't want the share at 1100 rupees. Can I make it compulsory? No. What is the word? Employee stock option plan. Okay, so one liner can be an option given to employees to buy the shares of the company at a price which is discount to the market price. You want to write this down as a one liner? Just as a value addition, has got nothing to do with fundamental analysis, but just value addition for you. ESOP, employee stock option plan. Employee stock option plan, ESOP. Dash. It is an option given to employees of a company. It is an option given to employees of a company to buy shares. To buy shares at a price. At a price what? Below the current market price, or at a discounted price, at a price below the current market price. Okay? Sorry? Generally new shares, fresh shares will be issued generally. Okay?
मैम ये शेयर्स जब इशू करते हैं तो कंपनी को डिक्लेयर करना पड़ता है उनकी रिपोर्ट में कि to our employees.
How many ESOPs have been given? That is also declared in the annual report. If you'll find all sorts of disclosures in the annual report. ESOP will be separately given. Okay. Huh. What about that? Mutual funds and fundamental analysis. हाँ, इसमें क्या करना है आपको? दोनों में से सही ऑप्शन क्या रहता है? No, no. Fundamental analysis knowledge is required if you yourself want to take a decision which share I will buy, which share I will sell. Okay. Mutual fund as an option is chosen when you don't want to apply your mind and you want someone else to take a decision on your behalf as to wherein you will buy or what you will sell. So in mutual fund, like I told you yesterday, you just give whatever X rupees, 1000 rupees, 10,000 rupees to whom? The mutual fund, HDFC mutual fund, if you remember yesterday. Then there is an AMC. What is AMC? Asset management company. They will decide for you where to buy, where to sell, whatever. All the decisions will be taken by AMC. So if you don't want to take tension, go in for mutual funds. If you're ready to risk out, go in for shares. But mutual funds sahi hai. This is galat. If you invest in mutual funds, risk to hai bhai. Ultimately, I am not investing, but someone else is investing in share markets only. Can that person is also a human being? Can his judgment go wrong? Yes. तो मैं बोलती हूँ अगर मरना ही है तो खुद की गलती से मरेंगे, दूसरे की गलती से क्यों मरेंगे? At least get the learning experience, na? So that is why I can say this, that out of my total net worth, whatever I have, X rupees, not even 1% is invested in mutual funds for me. Because I will say that, do you think that I have incurred 0 rupees loss till date? Wrong. I mean, if any professor, any teacher is saying this, he is lying. Sure shot, he is lying. For everyone, it's a learning phase. Everyone makes mistakes. Everyone is going to go into losses. It's just about how do you learn from your mistakes.
Ma'am, but it's a little bit surprising that even CAs are incurring losses.
Because as I told you, because I am a CA, I will never incur a loss is again a wrong statement. Why? Like I told you yesterday, that I did fundamental analysis very nicely and that Trump declared some trade war with China. That's not in my hands. And even CAs, even if I do fundamental analysis, again I'm a human being, some information might skip. Okay? So psychology, yes. So psychology also matters a lot. So it's so many ifs and buts. But I feel that the thrill that you will get in stock market, that you can't get in mutual funds. Okay, if you buy even 10 rupees, 100 rupees share, and if it increases 3 rupees, हाँ पर मेरे को लगा ही था ये बढ़ेगा, भले ही कुछ नहीं पता आपको. That thrill is amazing. Right. So I always say that start investing in small amounts, but you'll learn a lot of things. People say start with virtual games. There are games like Money Bhai, wherein 1 crore rupees virtual cash will be given to you. क्या फर्क पड़ता है 10 लाख गए भी तो? It's virtual money ना? It's a game. There are games of stock markets, virtual trading. So these people who sell these games will say before entering into markets, first play our game, and then you'll get to know whether your decision was correct or wrong. But then please understand, if I'm giving you fake cash, you are playing it like a game only ना? It hardly matters. तुम्हारे जेब से अगर 100 रुपए का भी लॉस हो गया ना, you'll say अरे यार, I lost 100 rupees. I should have checked this, and you will never forget that. So invest in small amounts, but do invest. Unless and until you make a loss, you will not learn anything. Assume that like you are giving a tuition fee to me, you are giving tuition fee to stock market. I learned it like this. There was no teacher for me. So every year I used to take out X amount. Every month, in fact, I used to take out X amount. And I used to tell myself that this 1,000 rupees, this 2,000 rupees is like my fee for learning. Loss, if I incur a loss, it's a fee. Finish. That's how I learned. I didn't give any exam. In CA course, believe it or not, there are only 2 chapters, not 2 subjects. 2 chapters on stock market. In entire curriculum of 5 years. So don't be under the impression that all CAs know stock market. In fact, I'll say very few CAs know about stock markets.
I remember this you telling in one of your
YouTube sessions also.
you are also seeing many CAs sitting.
Many CAs also there who actually say that, see, the problem with CAs is actually much more grave. You all can tell me that I don't understand stock market very proudly also. I'm an engineer, I don't understand stock market. उसमें शर्माने की क्या बात है? I don't understand it. It's very difficult for a CA to say this in public. But the fact is that we are not taught about stock market in our curriculum only. And this fact is not known to outsiders. So इसीलिए आपके भी अगर कोई friend circle में होगा ना, and you go to a CA to visit, you might ask him a question, क्या तुम्हारा क्या logic है, किधर जाएगा market? अब वो CA बोल रहे मेरे को ही नहीं पता है. But he can't tell that openly. He'll just say that no, market is very complex. Huh? You will not understand. This is the only reason he can give you. Okay, so it's good that you're from a non-commerce background. You can openly tell I don't know anything and learn about it. Okay, so on this note, we'll stop for the day. I'll see you tomorrow. Bye-bye.